Christian, happy Monday. How are you doing here today?
I tell you what, long time no talk, right? After last week.
Look, I first of all, I just want to formally apologize. I know the last time we had you on, we had some stream technical difficulties. So I appreciate you making some extra time here today to join us. I wasn't sure how many people were able to join last time. So really, really appreciate you taking time out of your day. We're going to double up on the T3 content this week. And I think that's going to be really, really good for everybody. Right. So learn Christian's #1 option strategy for finding precise trades in less than 24 hours. I'll go ahead and throw the link in the chat. There's also a QR code there on the screen. You can go ahead and get Christian's stuff. Christian, I'm just going to start. We're going to go guns blazing right off the open here. What setups are you looking for here this week? What is catching your eye this week?
Yeah, for sure. I tell you what, when you get in one of these market modes where it's just kind of a little bit, up, feels like it's up, you naturally start looking for those long trades to the upside. As you mentioned, the option strategy in question, we really look for those long shots if we can get them, especially towards the end of the week. So we love the things like the Teslas of the world. We love the stocks like Lululemon, these stocks that can really move, fly around. However, what I will say is that it has felt like the market has been moving higher here recently, but it actually has not, right? So if we pull up, say, for example, the NDX, if we pull up the S&P, if we pull up the Russell, we pull up the Dow, we pull up the NYSE, everyone is declining except for the NASDAQ. The S&P started declining about a week ago. If you look at the NYSE, the Russell, and the Dow, they've been declining for now almost a month, like 3 weeks. So we look at it and ask ourselves, and this is where that kind of taking those long shots come into play, right? There's no free lunch. And so on the surface, something might not make sense. What do you mean you're going to buy some puts? Look at this market. Well, if you want to knock one out of the park, right, you're going to have to take some shots. And so one stock that we looked at this week that really could pay off in a long shot is MDB. We trade a lot. And, for all of your listeners and all your, viewers, we look for those things that can move, right? So we look for the stocks that if we can get it right, these are things that run $10, $15 if we can. This thing was really taken out back on Friday, obviously 2 days prior. And we think this has a real shot of not only getting to 250, but maybe even down to 240, starting to challenge some lows. And those are those kind of long shots we look at and ask ourselves, does this make sense, right? Are we comfortable with the risk reward, knowing that it's a lower probability type trade? In other words, hey, look, if I can turn this into a 500, 1,000% winner, am I willing to take this shot? Do I feel like it's realistic? So we're keeping an eye on this. On the long side, we're asking ourselves, Lulu had a nice little turnaround on Friday. We like the level it came off of. It's an old level for us. It wasn't the one I thought it would hold up at, but it did. Made a nice, cute little turnaround. So we're eyeballing that this week for a potential long play. Whether or not we do that now or wait to get a little later in the week, that's where those big explosive gains come from, or when we wait for later in the week where the premiums are lower for us.
Okay. Awesome stuff there. I think that you picked two really good stocks there. I know we had MongoDB, that recent down move set off by its earnings here. I think your spots were spot on there. Frankly, I actually saw a little bit of room down there to 225 if we continue to pull. Sure. And Lululemon, the exact same thing in the opposite direction here. So we obviously had earnings that really caused this stock to pop here above some previous levels that we're looking to take advantage of. So really good stuff. Looks like earnings were the catalyst that really kind of started the recent move in these two stocks. Let me ask you, do you have any earnings, or maybe I would expand that, I'd say maybe even earnings or an econ event that you're looking to capture here this week? Do you use options to capture binary events like that at all?
Absolutely. Although I tend to stay away from the earnings, at least going into them. So my approach, I don't really get into spreads and things like that. Like, we really like to take our shots. So now we're going to take our hits, right? So we're not shooting for 90% winners by selling a whole bunch of out of the money credit spreads, right? We're taking these shots where we can get these big winners, and we're going to, take our hits along the way. But we don't mind taking 3, 4, 5 little hits if we can hit that one big one. Going into to do that, we need to be directional, right? So we're going to go straight calls, straight puts. A lot of times we're doing strangles on both sides, and it's very difficult to do strangle into obviously earnings because of the cost of the premiums. However, after the fact, a lot of times we like to take advantage of that volatility while it's there. So we've already notched one winner on MDB a week ago. We're looking at it potentially again. We do like setting ourselves up for this week's FOMC. We know we might get some, that kind of rattling around, that rejuggling of the sack there, so to speak. So what we'll tend to do is going into Wednesday, we'll position ourselves for that potential move that will likely go into Thursday or Friday. So stuff like that, jobs reports, earnings, a little different because when you look at those stocks, obviously the premiums they don't allow us to do what we want to do, so we stay away from it. It's after the fact when you get some of that premium sucked out that then we might try to take advantage of the volatility that's still there.
Okay, so got a direct question here about a specific stock from the chat. Broadcom, ticker AVGO, and this is kind of what you were just talking about. Now that the event is out of the way, maybe some of the premium is sucked out of this popping to new highs here. Do you have any outlook on Avago?
Yeah, as a matter of fact, I think we talked about it last week briefly, right? Or was it the week before? We talked about that 185 breakout spot.
Yep, we sure were. And I'll tell you what, this 185, 186 is what actually I have it marked at here on the screen. But it seems every trader that's been looking at Broadcom has been looking at this level. Now we got the breakout level. So my whole thought here with stocks like this is if you missed this pop, if you did not play the binary earnings, and now we're breaking out here, what's the next move?
Absolutely. And my answer to that is, who knows? Right? Who knows what that thing's going to do? When you get a pop like that, let's be honest, we're not sure, but that's where we look into it. A lot of times we will take something like this that we think there will still be some ample movement, and we'll look at playing both sides of it. Now, there's a lot of time between now and Friday, so there's nothing saying we have to trade it now. What we can do, take for example, Lulu. Lulu put that nice little shooting, that little, whatever you want to call it, inverted hammer, shooting star, whatever you want to call it. The bottom line is after its earnings, look at that big reversal.
Yep.
Okay. If we waited a day, what we got was a clear sign that we're probably pulling back. Probably, no guarantees. So there's nothing saying we can't sit tight on Broadcom and say, I'm going to wait for you to show me something so I can pick a side. Because if given a choice, we'd rather pick a side rather than being on both sides. So nothing saying we can't wait it out. But I will say, if this thing's still kind of goofing off in this range and we go into Wednesday and we have the combination of a stock that just did this, that is normally a little bit volatile by itself, and we have the FOMC, what we would likely do is try to play both sides of this into the end of the week.
Okay. Really awesome stuff there. Appreciate that. There you go, Andrew. Got your outlook on a Broadcom. I like how you tied that into Lulu there too. Okay. I'm going to get you out of here on this. Let me ask you, as we get closer to the end of the year, or the turn of the year here, do you have, or are you creating any plan to position yourself for the end of the year, or conversely, the start of next year?
Not necessarily in the way of tangible, literal trades. However, we always have these discussions at the end of the year, beginning of the year. What do we expect? I know that I'm a little concerned with where we go big picture. When you look at things like we have forgotten about the threes and tens, right? We've forgotten about the inverted yield curve. We've forgotten about what history tells us about rate cutting cycles. And there is a lag with these. And so we look at these, and I think when you look at what tends to happen in these environments, it tends to worry you a little bit about what's coming a few months ahead. If you look back at the last little bear market we had, a little 30 some odd percenter, that thing kicked off right at the turn of the year, right? In 2022. And so I do worry about what does the first quarter or first 6 months of next year look like bigger picture, even if it is just a correction. We've been pretty fortunate. If you look at this entire bull we've had, we have not cleared that 10% mark on the S&P yet. Right. So we're talking 2 years in now, over two. No reason to believe it's not going to continue. We're getting a little long in the tooth without a nice little 15 to 20% or at least. And so it kind of makes you wonder, hey, we clear the year, we get all excited about it, and finally we see some of that weakness that we're going to have to take some hits. So that's what I've been telling my audience is just don't, as I like to say, don't get caught with your pants down. We don't go up every day forever. We don't rally forever. So just be prepared for the reality that a correction to one extent or another is probably closer than it was, say, 3 months ago.
Yeah, I think that's really good. And I think that's a really prudent kind of approach to that. Your point about the 10% there is well taken too, because this move from July 2024 down to what is this? August, the beginning of August, not quite 10%, 9.75. So we did not get that 10%
And
correction.
look at the one before. I tell my members, like, look, people sometimes people on the financial, networks try to act like this 10% correction number doesn't matter. It does. It's kind of like how those programs are ready for that 200-day moving average test.
Yep.
Look at how both of these stop short around 10%. It's almost like the market saying, no, 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 I'm not going into correction right now. So it does matter, I think.
Yeah, this actually is just because of the way I drew it. That is really, really close. So, okay, yeah. Really good stuff there. Christian, we're going to keep checking in with you. I really appreciate it. And again, thanks again for sticking with us when we had a technology issue. Folks, learn Christian's #1 option strategy for finding precise trades in less than 24 hours. He's awesome. QR code is right there on the screen. Link is in the chat. Christian, have a great week, all right?
You too, Ryan. Have a great one. Everybody make some money.